All right, so today we're hearing from two experts in the investing industry. These guys will talk about how the investing landscape is changing, how young investors can think about long-term investing, and we'll even talk about how Reddit can have a significant impact on a certain index. Now, before we introduce our guests and dive more into BUZZ, a quick reminder here that securities, as well as the strategies discussed in this video, are not recommendations and for informational purposes only. Investing always involves risk. All right, so let's get into it.
Hi, everyone. I'm Jamie Wise, the founder and CEO of BUZZ Holdings, the company behind the BUZZ U.S. Sentiment Leaders Index.
Hi, and I'm Ed Lopez, head of ETF product at VanEck.
All right, guys, thanks so much for joining. So today, what we want to talk about is not only does the younger investor want the ability to choose and customize their portfolio investments, but we have to give them more credit. I think I had this notion, me personally, I'm only in my mid-30s, so I'm still on the younger side, but I had this notion that if you're under 30 or in your mid-20s, you didn't necessarily have the experience to even know how to pick a stock. Things have really changed. Now we're getting in this realm of the new wave of investing, right? New money's coming in a new wave. How does the younger investor go about finding the balance between going out and picking a basket of random stocks and buying and selling versus buying an ETF like BUZZ or just general ETFs and building a long-term investment portfolio? I'd love to hear both of your opinions on that.
The tools available to individual investors are just incredible today, right? So you don't have to necessarily pick a stock, right? You can pick themes that work, that make sense to you. So in the sense that you believe that there's value in the community and sentiment can complement your portfolio, you can access that in a diversified way through the index without having to make concentrated bets. And you can do the same, whether that's for sentiment or for a specific sector of the market or natural resource stocks. So the explosion of ETFs and the breadth of the product offerings within them allow investors to still maintain, I think, a good level of diversification and not take on too much risk, but really be able to identify segments of the market that they want exposure to and achieve that in a way that they couldn't 20 years ago.
Yeah, I would totally agree. And I'm probably a little biased when it comes to ETFs, but the idea that you have so many ETFs out there now that provide exposure to different thematics, different areas of the market that weren't available 20 years ago is I think, a game changer for this generation. This generation has actually, it seems to have really started to find an interest in stocks and stock trading just over the last couple of years. Things have definitely changed where there's more information just on the internet and socially that they can tap into. They can do it themselves, obviously. I think in time, as the younger generation, the millennials, grow and earn more wealth, they'll still use and may still look for advice and may use advisors, perhaps in a different way, perhaps in a more subscription-based type business arrangement. But there is just so much more information now that they can use to inform their investment decisions. And there are better tools these days in the form of ETFs, for instance, that they can express those opinions, like Jamie said, in a diversified way. You think about all the millions of online messages that are produced around certain stocks. One of the things that sold me early on, that just kind of dawned on me, into something that Jamie said about diversity of opinion. You have diversity of opinion from people in far-flung places all across the U.S. and versus maybe the groupthink that might happen on Wall Street. So you get a depth of opinion and insights and different perspectives that go into their analysis and what they post online, which I thought was really interesting and really compelling.
The individual investor is a lot smarter than most people give them credit for. Historically, individuals might have been told what to do by an advisor, and the tools that they had at their disposal to do their own independent research were very limited, right? Before the internet, it was limited to conversations around water coolers or dinner tables or with their advisors. But today, as we know, the whole world has changed, and having an open lens from which to view the world, Joe in Indiana or Sally in Arkansas is just as capable, in my opinion, as any other portfolio manager in sort of identifying potential trends and doing independent research. And now having these platforms and forums to go out and share and debate and discuss and test their views against their peers leads to better decision making. And I think, when we launched this index 5 years ago, a lot of people sort of laughed at that idea. They were still anchored in those old notions that individual investors, were contrarian in what they were doing. And what we've learned, or I think what the rest of the world has learned in the last year, GameStop to an extreme highlighted that, was, these individual investors really are a lot smarter than people give them credit for. And what happened with GameStop wasn't by fluke, right? That was a very well thought out understanding of the market, understanding of positioning within the market. And that forum on Reddit took advantage of that. That was not luck, right? That was interesting, right? That you could see that people really did research and understood what they were doing. And I think more than ever now, people are open to the idea, and most people watching this podcast, you're online watching it, and so you'll see, you're online doing research, you're probably a part of these forums, you see the engagement of your peer network and you get value from it. That's what the BUZZ Index is a reflection of, the aggregate views of all these different styles, whether you're a growth investor, a meme stock investor, a value investor, a technical investor. Whatever approach you have to markets contributes, and the aggregate is what you see in the index.
What would you say excites you the most about how things have changed into where we're heading with this kind of new wave investing?
For me, I think the engagement that we've seen from individual investors in their own financial future. I haven't seen that in quite a few years, where it's been largely financial professionals and institutions, probably since the tech bubble, the dot-com bubble of 2000, where people were really excited about trading and investing. I hope that interest continues going forward, even if we perhaps see a downturn in the market. But long term, the interest level, the resources that people have at their fingertips for better information is exciting. The ability to share information and really test your ideas and theories with other people is exciting. And I guess as I mentioned before, just the breadth of tools and access that people have. Prior there were a lot of different asset classes that were just really hard to tap into. Even something like the index for BUZZ, which Jamie sometimes talks about it as sentiment as a factor. Isolating those factors was sometimes just the realm of hedge funds and professional investors. But now you have the ability through his index and through ETFs to tap into some of those resources. And I think that's extremely exciting for the younger generation and going forward.
Yeah, and I can say, when you talk about the level of engagement going up, we see that in the data, right? When we started this journey back in 2014 and we were seeing, 3, 4, 5 million posts a year and thinking, wow, this is an incredible volume of data to analyze and get some insight from and understand what the community is talking about. It's gone up like 20-fold since then. It's remarkable. COVID, really stepped it up a notch in the sense that so many more people took to the online platforms. But what's interesting, even as we've been reopening and slowly coming out of this pandemic, we haven't seen a drop off in engagement. Once individuals go onto the platforms, go online, find like-minded people, get that feedback loop that's so helpful for them, even if they go back to their day job, they have their phones, they have their mobile platforms, they don't give it up because there's value there. So I don't see the engagement going down, at least from a data perspective. We've been in challenging markets the last month. Certainly a lot of the growth stocks and some of these thematic stocks have been especially hard hit. It will be interesting to see if that results in long-term sentiment changes to those stocks. Follow the BUZZ Index, we'll find out. But certainly we're not seeing the volumes of conversation come down.
I remember my dad telling me that when he first started investing, he'd be on the phone with his broker up in New York, every week, and the guy would call him and tell him about this new stock. That's how conversations happened. There was no forum. Maybe he called his friends in the neighborhood, and it's really cool to see how many different forums there are, not just one, not just Reddit, not just Twitter, not just StockTwits, and ask anonymous users what they think about certain investments, ways to build wealth in general, and just any different money tips. I love the fact that information is there, and I'm big on educating younger investors and having the tools out there. I think it's huge. I think it's massive.
That's it. I couldn't agree more. I mean, that is the whole thesis of why we're, a part of this community, a community I've always believed in, and it's so great to see how it's matured in a way, but still maintains the diversity of opinion within it. that groupthink that, I think even many on Wall Street can succumb to. And certainly GameStop, there's another example, right? Groupthink on the short thesis for, going into that doesn't always get you to the right place. And I think, people from all around the world, across America, sharing that their opinions, there's real value in understanding that. And, the individual investor can take that feedback and then do their own work and come to their own conclusion and really be in such a more powerful position today than when they were just being told something by the advisor and then had to debate it around the water cooler with 2 or 3 people.
Thanks so much, guys, for joining. Jamie, Ed, I had a great time chatting with you. I'd love to have each of you individually and together back again.
Pleasure.
Thanks for having us. It's been fun.
Thank you.